Are you tired of losing a big chunk of your income to taxes every year? I mean, it's like throwing money right out the window. But did you know there are ways to use the American tax system to your advantage and keep more of your hard-earned cash? That's right, we're talking serious savings here, people. This video is jam-packed with actionable strategies to save on taxes, maximize your benefits, and even grow your wealth, all legally and effectively. We're not talking about any shady loopholes here, folks, just smart moves that everyone should be making. So buckle up, get ready to take some notes, and stick around till the end for some bonus tips that could completely transform how you manage your finances. Welcome to Smart Money with Jim. Let's do this. All right, let's talk tax credits. These are like hidden treasures in the tax code, and trust me, you don't want to leave any of this money on the table. Unlike deductions, which just reduce your taxable income, tax credits directly lower your tax bill, dollar for dollar. We're talking serious savings here, folks. Take the child tax credit, for example. This credit can put thousands of dollars back in the pockets of families with qualifying children. That's money you can use for anything: education, savings, even a well-deserved vacation. Then there's the American Opportunity Tax Credit, a real game changer for students and their families. This credit can help offset the cost of college tuition and fees, making higher education more affordable. But wait, there's more. There are tons of other tax credits out there for everything from energy-efficient home improvements to adoption expenses. It's like the government is giving you free money to do things that are good for you and your family. So how do you find these hidden gems? It's simple. Talk to a qualified tax professional. They can help you navigate the tax code and make sure you're taking advantage of every single credit you're eligible for. Remember, every dollar you save in taxes is a dollar you can invest, spend, or save for your future. Listen up, investors. Did you know that you can actually reduce your tax burden just by making smarter investment choices? That's right, it's like getting a bonus just for being financially savvy. One of my favorite tax-efficient investment vehicles is municipal bonds, or munis as we like to call them on the street. These bonds are often exempt from federal income tax and sometimes even state and local taxes depending on where you live. That means more money in your pocket and less going to Uncle Sam. Another great option is exchange-traded funds, or ETFs. These bad boys are like baskets of stocks that track a particular index, sector, or asset class. ETFs tend to generate fewer taxable events compared to mutual funds, making them a more tax-efficient choice for long-term investors. And hey, if you're looking for a way to diversify your portfolio and potentially reduce your tax bill at the same time, consider investing in real estate. Rental income can be a great source of passive income, and you can also take advantage of depreciation deductions to lower your taxable income. Remember, folks, investing is a long game. By choosing tax-efficient investments, you're not only growing your wealth but also keeping more of your hard-earned money where it belongs, in your pocket. Chapter 4. Attention all you work-from-home warriors. Are you claiming your home office deduction? If not, you could be leaving serious money on the table. This deduction allows you to write off a portion of your home expenses, such as rent, utilities, and even internet, for business use. Now I know what you're thinking. Jim, is this too good to be true? Well, here's the catch. You have to meet certain IRS guidelines to qualify. First off, your home office has to be your primary place of business. That means no setting up shop at the kitchen table and calling it a day. Second, the space has to be used exclusively for business. So, if you're using your home office as a guest room or a playroom when you're not working, you might not qualify. But don't let these rules scare you off. The home office deduction can be a real game changer for freelancers, entrepreneurs, and anyone who works from home, even if it's just part-time. Just make sure you keep good records and documentation to back up your deductions. Listen, I'm not a tax professional, but I know a good deal when I see one. If you think you might qualify for the home office deduction, talk to your accountant or a qualified tax advisor. They can help you determine your eligibility and make sure you're taking advantage of this valuable tax break. Chapter 5. Listen, even the savviest investors have losing trades from time to time. It's just part of the game. But what if I told you that you can actually turn those losses into a tax advantage? That's right, folks. It's called tax loss harvesting, and it's like turning lemons into lemonade in the stock market. Here's how it works. Let's say you have a stock that's down in value. Instead of just holding on to it and hoping for the best, you sell it at a loss. Now, before you start thinking this is crazy, hear me out. When you sell an investment at a loss, you can use that loss to offset any capital gains you might have realized from selling other investments at a profit. By offsetting those gains, you reduce your taxable income, which means you pay less in taxes. It's like getting a discount on your tax bill just for being a savvy investor. Now, I know what you're thinking. Jim, isn't this just a fancy way of timing the market? And to that I say not necessarily. Tax loss harvesting isn't about predicting the market. It's about strategically managing your tax liability. Of course, you always want to consult with a qualified financial advisor before making any major investment decisions. But tax loss harvesting is a powerful tool that can help you keep more of your hard-earned money working for you. Chapter 6. Now let's talk about a triple threat in the world of tax savings, health savings accounts, or HSAs. These accounts are like a gift from the tax gods, offering not one, not two, but three incredible tax advantages. First, contributions to an HSA are tax deductible, meaning you can lower your taxable income just by saving for healthcare expenses. It's like getting a discount on your health insurance. Second, the money in your HSA grows tax-free. That's right, just like a Roth IRA, you won't owe a dime in taxes on any earnings, as long as you use the money for qualified medical expenses. And third, withdrawals for qualified medical expenses are tax-free. So, not only do you get a tax break on the contributions and earnings, but you also don't pay taxes when you use the money for its intended purpose. Now there's a catch. You have to be enrolled in a high-deductible health plan, HDHP, to be eligible for an HSA. But trust me, the tax advantages alone make it worth considering if you're eligible. An HSA is like having a secret weapon in your back pocket to fight against rising healthcare costs. It's a smart, tax-efficient way to save for medical expenses and keep more of your hard-earned money where it belongs. Wow, we covered a lot of ground today, folks. We talked about maximizing tax-advantaged accounts, leveraging tax credits, investing in tax-efficient vehicles, and so much more. Remember, knowledge is power, and when it comes to your money, you deserve to be in control. If you found this video helpful, don't forget to like, share, and subscribe to Smart Money with Jim. By subscribing, you'll join a growing community of financially savvy individuals who are taking charge of their futures. Hit the bell icon to stay updated on our latest videos and learn how to maximize every dollar you earn. Taxes don't have to feel like a penalty. With the right knowledge and strategies, they can become a powerful tool for wealth creation. Thank you for watching Smart Money with Jim, and here's to making smarter financial decisions.